Bitcoin and gold are two strategic monetary assets shaping the future financial reset taking place in the global economy. This channel focuses on covering Bitcoin (BTC) technical analysis, gold (XAU) technical analysis, and how institutional capital flows between these two assets. We always start our Bitcoin daily technical analysis with a BCG simplified market structure dashboard to give us a snapshot of the current Bitcoin price action. The dashboard looks at three core areas: trend and swing direction, price movement and price zones, and current volatility. The dashboard tells us Bitcoin remains structurally bearish, although currently seeing a pattern of higher highs and higher lows on the daily time frame. However, in the context of the higher time frame structure and ranges, there's nothing to get too excited about. If you take nothing else away from this video, here are the three structural price levels on Bitcoin every serious investor or trader must know. You will note that the resistance and equilibrium has gone higher. The rest of the video will explain these details. $90,500 resistance level, $75,500 equilibrium level, $60,000 support level. In today's analysis, we cover: what is current price action telling us? Which price level are institutions defending? Which price levels could change structure? Welcome back. We are Bitcoin Capital Gold. A global financial reset is quietly unfolding, with governments and major institutions positioning for a future where Bitcoin and gold form the foundation of the next monetary system, replacing our broken global fiat system. This channel's only focus is just these two assets, Bitcoin and gold, using structured technical analysis to understand market structure and researching how capital rotates between these two strategic assets. If you want to stay ahead of this far-reaching monetary shift, this channel is designed to help you understand this move early. Let's get into the details. The market phase is mixed. On time frame, yearly trend is up, monthly trend undecided, and weekly down. The current swing direction on all three time frames is down. What has changed over the last 2 weeks are buy orders creating an uptrend on the daily swing chart. Rising lows were made on the following dates: 24 February at $62,526, 28 February $63,108, 8th March $65,677, and 14th March $70,399. Rising highs were made on 4th March, $74,090, and yesterday, Tuesday's high, $75,594. Let's round it up to $76,000. Whilst this is good news for the bulls, they still have a long way to start celebrating. Our next structure high is on 28th Jan 2026 at $90,493, which is still a long way up for the bulls. What we do have now is a change in the equilibrium point, which now becomes $75,500, which brings us nicely to the Fibonacci zones. The Fibonacci resistance zone is between $74,612 to $75,160. The equilibrium level at $75,500 sits just above our zone. Therefore, buyers have to first break higher than the Fibonacci resistance, and we need to see closes above $75,500 to see strength in the buying. If it pushes back down, this is a sign of weakness and gives sellers an opportunity to reply. Can volatility provide us with any more clues? We've just started week 12, so it's still too early to know the range for this week. The last 2 weeks and last 2 months are showing declining ranges, indicating compression. Right now, the market is not yet expanding strongly in either direction. Instead, it's building pressure inside a well-defined structure, and eventually that pressure will resolve with a directional move. With the structure and key levels now defined, the market can realistically unfold from here in 3 different ways. Scenario 1. Buyers continue the move. Buyers can break through the Fibonacci resistance zone at 75,000 convincingly. We are currently trading at around 72,500. A convincing close above would indicate buyer strength, which sees us pushing up towards 80,000 and possibly higher to the structure high at 90,500. Scenario 2. Range continuation. The daily swing highs and higher lows are encouraging for the bulls, but they need to maintain the momentum higher. If they don't show strength, then price may drift sideways. Scenario 3. Support failure. If the sellers firmly reject any upside move above $76,000 and show force, we can push down lower. The structural low of $60,000 has still to be tested. $63,500 is the Fibonacci zone it may challenge first. So the market remains balanced for now, but those are the three paths that price could realistically take from this structure. Before we finish, let's simplify everything into the three numbers that matter most right now. If you remember only three numbers from this entire analysis, remember these: $90,500, the range high; $75,500, the equilibrium point; $60,000, the range floor. Currently, Bitcoin has a downside bias. So the structure is actually quite simple. Whilst it's true we've broken free from the dominant range high, it may still exert its influence and draw prices back into its gravity if we are unable to push higher. Monday has started promising, but with Fibonacci resistance, we would need to see a close above $76,000 as a sign of bull strength. If the bulls can do this, we can proceed to the next psychological round number of $80,000. If we fall back into the dominant range, then this rally is short-lived, and we may get dragged lower, testing both the Fibonacci support zone and structural floor at $60,000. We are only at the start of the week on Tuesday, and the rest of the week's story has yet to print. It will be interesting to see whether buyers or sellers take charge. We simply just observe and let price action play out in any direction it wants to go. From a BCG market structure perspective, the key elements remain unchanged. The swing remains bearish, key price levels on the upside are being tested, and volatility continues to compress. And that's your BCG simplified market structure view of Bitcoin. Every day, we publish a simplified market structure briefing on both gold and Bitcoin. Gold and Bitcoin are not competing assets, they're strategic levers responding to different financial conditions. Gold is asserting itself as the defining store of wealth of our era, reaching all-time highs against a backdrop of war, inflation, and institutional demand. Bitcoin is simultaneously rewriting its own narrative, no longer simply a speculative asset, but one that serious portfolio managers are beginning to position alongside gold. Understanding how these two assets interact is no longer optional. This channel is built to help you think through that decision with structure and discipline. If you found this video useful, consider liking and subscribing so you don't miss tomorrow's video. What do you think of the levels we gave? Do you agree? Do you have your own levels you're watching? We'd love you to share your thoughts. Comment below so we can all discuss. At the heart of the new global financial economy will be Bitcoin and gold. If you want to be ahead of the curve, follow this channel.